Hi, Philip.
Hello, Yaakov. Hi,
Welcome
Phil.
back, everybody, to this special episode of PSA, People, Stories, and Accounting, where we will go over U.S. and Israeli taxes for people making Aliyah, U.S. citizens living in Israel, and the like. I'm Yaakov Jacob.
And I'm Philip Stein.
And Philip, just before we jump into our topic for today, I just wanted to give you a quick update that OpenAI recently released ChatGPT with agent mode, which means that it can go out and take actions on your behalf. I tested the process yesterday and I had it basically prepare a tax return, fake tax return for me, giving it a TOFES 106, the Israeli salary, and the basic information, of course, made up basic information like a social security number and the like. And I said, here you go. This is the information. Based off of this information, please prepare a tax return. It ran through everything, went to the TurboTax website. I had to log it in, but once it was logged in, it answered all the questions correctly. And the only thing that stopped it from finalizing that tax return and sending it to me for review is the fact that it costs about $90 when you have foreign income. But it got pretty darn far. So here we are.
Now that's interesting. So when I'm familiar with the TurboTax format, they do ask you all those questions. So did you answer them or you provided that beforehand?
I had provided a basic client outline beforehand to the agent, and it ran through and prepared everything.
That's amazing. It's
We
really
are
amazing.
getting to an age where we will be able to advise clients and help them more without having to do the nitty gritty of actually
Wow.
preparing them potentially. This was a very basic return, but yeah, kind of scary.
Yeah, I actually saw an interview yesterday. I was watching with Bill Gates. Forget who was interviewing him about AI, and it's public knowledge, but something like 30% of Microsoft code now is being written by AI. So, that's, a lot of potential, perhaps beginning programming jobs may not be coming to fruition.
Well, we'll see. But yeah, it's very, very interesting times that we are living in. With everything going on in the world. But to dive into our topic for today. So why don't you explain the topic a little bit to
Yeah, I
everybody?
mean, this is a topic that certainly, since I've been practicing, has evolved. Once upon a time, if you wanted to move to Israel and keep your job in America, it basically meant you had to get on a plane, once a month, maybe in some extreme cases, once a week. And then as technology evolved, communication technology, I recall that I had a client who had set up, I think it was before fiber. I think it was called ADSL or something. He had all these lines, and he hooked up his entire office back in New Jersey. He was in real estate. He could see every office. He could see the water cooler. He was sitting in Jerusalem, or not in Jerusalem. He was sitting in some moshav. He could monitor every single thing that was going on in his office. But today, as you well know, people may keep their jobs and come on Aliyah. Okay, which does present some unique challenges, and I think that's what we're going to talk about today. And we'll even I'll share some real examples of things that I've come across. But uh, I think it's a great opportunity now for our clientele, those people who make Aliyah from the United States. They can keep their jobs, uh, not miss a beat, but they better know what they're getting themselves into. Okay.
Yeah, I don't think that there's a better time to make Aliyah than right now. It is easier than ever. And COVID, I think, was really a big stimulus for remote work. It really pushed a lot of people to be able to work remotely, make
Excellent.
Aliyah. It's phenomenal. But what are some of the challenges that we have? So the biggest thing I would say is that when people come to Israel on Aliyah, they likely will cross certain thresholds, either getting citizenship if they are making Aliyah itself. Lots of people come here and they don't actually make Aliyah, right? They just come on, they either get an A1 visa or they just come for a number of days, and they don't necessarily realize that they can still be considered Israeli tax residents even if they don't make Aliyah. And so when we say Aliyah, we are really talking about you're coming to Israel for a large amount of time during the year, regardless of if you are actually making Aliyah, if you're getting an A1 or the like. Israel has this beautiful benefit called the 10-year tax holiday, colloquially. I don't know what it's actually called in the code or anything like that. I don't know if you do, but it is
Not sure.
basic.
Okay.
Yeah, but basically what it means is that for the first 10 years of Aliyah, all of the income that you earn outside of Israel, it will be tax free. Okay, but we are definitely in an interesting year, and Israel is making a push for people to come on Aliyah right now, specifically because they're going to change that law in the beginning of 2026, right? January 1st, 2026. If you make Aliyah on January 1st, 2026 or later, you will have to not pay taxes on your non-Israeli income, but you will have to report it. And everyone knows once you start reporting it, then there will be more questions. There will be more inquiries as to, hey, why do you expect that that is not taxable? I mean, Philip, maybe you can talk to why Israel is now all of a sudden changing this law and what's been taking place historically.
Well, I think actually this change, which they've been pushing for years, by the way, this is probably the third attempt. The first two were pushed back. Particularly, I give a lot of credit to Nefesh B'Nefesh, who were very involved in having this law come into effect, and it's been around a long time now. We have a lot of experience with it. This legislation was passed in 2008. I was sort of involved with it for people who came on Aliyah after 2007. It's been around a long time, but what always bugged the Israeli tax authorities was not so much the U.S. taxpayers who take advantage of this holiday, but the particularly Europeans, people who, when they move here, they cease to be tax residents of their former country. So people really could, for 10 years, could be in a zero tax situation, because we know in the US, even if you're living here, you're still subject to US tax. And then some of them would pick up and go back. So they sort of came here for 10 years, 9 years, and paid no tax anywhere. So I think this always bugged the Israeli tax authorities. But this change, as you say, you're still non-tax, you're not subject to tax on income that's generated outside of Israel. But the real challenges are not with regard to passive income. If you've got an interest, a bank account, dividends, capital gains, a brokerage account, real estate, you don't have to worry. And I think you would agree with me, Yaakov. If you're a retiree coming here, and even if you
Yeah.
come after December 31st, 2025, I don't think you have anything to worry about. Okay, there's not, and you're not active. I think the people, and that's what we're going to focus on today, are those people who still are working, particularly with their former U.S. employer or their current, or they have businesses there, because Israel can say, and I always use this as the two extremes, the surgeon who makes Aliyah and the computer technician who's running all the servers, or if there is such a thing anymore. The surgeon has to get on a plane every time he or she goes back, and that is clearly income earned outside of Israel, and that's beyond challenge. But the guy or a woman who's sitting in their basement in Modi'in running the tech group for their large company, even if the money is still going from their employer's bank account to their bank account at Citibank or wherever, but they're doing everything here, that is subject to Israeli tax. So then there's the in-betweens, the people who travel, part of it. And I think one of the examples that you want me to share is, let's say someone who's an attorney
Yeah.
and they litigate. Well, is the money they earned when they were prepping for the case, or when they actually went to court, or when they sat in the big boardroom and came to a settlement? Where did they earn their money? So when you're not reporting it, you can get legal opinions, you can take positions that say, no, I really earned my money when I was there in court. I really earned my money when I was physically there. Now that you're reporting, or you'll have to report, Israel has what's called a linear approach. They'll say, you were here 10 months. We don't care how it was earned, 10 of 10 twelfths. Maybe you can beat that back, but you're gonna have a challenge on your hands, and you're probably gonna need an audit. So that to me is the big thing. And the other thing that I just wanted to mention is, very often, and people should be aware of this, thinking, well, I'm moving, as you said, Yaakov, this worked great during COVID. Okay. So what do they care if I'm sitting in Teaneck or I'm sitting in Tel Aviv? And the question is, they do care, because companies There's a principle called permanent establishment. And they may say, well, now that you're working in another country, particularly Israel, part of our income, our corporate income, which is attributable to your activities, is subject to Israeli tax. They say, sorry, you're off the payroll. So we're going to talk about some of those things. But those are things that could come up, particularly the foreign work category, is that if you start having to file, you're probably going to get a letter from us, particularly if you're generating an income that's a U.S., you know, New York City type level. That
Yeah.
you're low hanging fruit in the, as they would say, in the tax world.
Yeah, another example I would say is what we've seen is a influx of radiologists, right? Moving to Renana. There are so many really I feel like Renana radiologists, it all goes hand in hand. We've seen a number of them move out to Renana. They are looking at x-rays at, all different hours of the day, but they are physically sitting and doing the work in Israel. So what people often misunderstand is the fact that if you are sitting and doing the work here in Israel, it isn't exempt under those 10 years. And so, because you are doing the work here in Israel, it is taxable. Now, when you're getting that W 2 salary, or even if you switch and get it as a consultant, right, which is often another way of doing it, there are there's, I would say, what I like to call the five different potential taxes that you can owe, right? And so we have, just going through them one by one, you are still subject to US income tax. And the main reason why you're subject to US income tax is because you are a US citizen. Regardless of where you live, you are subject to file US taxes on your worldwide income, right? The second one is Israeli income taxes. And those two might be able to offset each other, but very often you have to be careful because if you're getting a W 2 salary, they could be withholding on your US taxes, right? On your W 2, they'd withhold taxes at source. And then Israel is going to come along and tax you on it. And you have to file to get money back from the US government. Again, Israel is going to tax it because you are doing the work in Israel. You have your US Social Security tax, right? And that is number one, because you might be on a W 2 working for a US employer, or two, Philip, as you know, there is a lack of a totalization agreement, right? And so even if you are self
Right.
employed, if you are getting that 1099 to you directly, you are subject to US Social Security taxes or self employment tax. You are also subject to Israeli Bituach Leumi taxes because you are doing the work here in Israel. So they will subject you to Bituach Leumi, which is the Israeli equivalent of Social Security. And lastly, the one that most people forget is, let's say you're coming from a state like New York, California, you have to prove that you've broken residency. And often, if you are still under the employ of a New York based firm, there are convenience of employer rules and there are specific guidelines that they might still have to withhold for state taxes. And
And you may be subject to state tax. There was a case, I'm sorry to interrupt you, but there was a very famous case a few years ago where someone in New York just preferred to live in the Tennessee, the Smoky Mountains, in a log cabin or something. He just preferred doing his work from there, which he could. And New York came along and won and said, just because you wanted to live in the Smoky Mountains doesn't mean that you don't have to still pay New York tax. So you're right. Even people could theoretically work out an arrangement. Their employer isn't worried about PE, permanent establishments. That, yeah, just stay on the payroll. You, on the one hand, are no longer a resident of New York, but New York could still say you're subject to New York tax.
yeah, and you can be working like a dog all hours of the day and night trying to make that living. And then all of a sudden you are hit by 4 to 5 different taxes. So the goal is always to, I would say, reduce the number of those taxes that are applicable and then to reduce the overall tax that is applicable. And there's a number of different ways to do that. And I think now times are changing. But the most common way has been for a long time to do that. And I think that's partially what's changing nowadays. After 2017, it definitely had somewhat of a switch, and I think even more now. But that oldest way is to open up an Israeli company and have money being paid from your employer, either to some kind of mechanism to you direct to an LLC, to that Israeli company or the like, and then having that Israeli company paying you, right? And so that has always been something that we've seen happen quite a lot. You open up this Israeli Chevra Ba'am, or this Israeli corporation. The Israeli corporation then accepts the money on your behalf. You own it, and then it pays it out to you as a salary, dividends, and the like. And that is something that I think we've seen for many, many years now. It's been a very popular thing, and it's going through changes. It went through changes in 2017 and 2018. And now with the one big beautiful bill going back to what we've been talking about for the past few weeks, there are some additional changes that are happening with it.
Yeah, I love, I mean, if someone, in other words, sort of the ultimate, one could set up their own corporation here in Israel, okay, and be an employee of that. That is expensive. One of the things in Israel, people who are listening, this was some very clever advocates for accountants in this country where they require every corporation to be audited by an Israeli CPA. So you think, well, I just got a small business. I'm the only employee. I only have one customer, my old employer. That return has to be audited. So you have to have double entry bookkeeping. You have to have an audit at the end of the year. There's a lot of expenses, and particularly I found when people get off the boat, the proverbial boat. I prefer you focus on getting set up here and just doing your work as opposed to getting into the entire myriad of bureaucracy that Israel has. The problem is with one of these, and as you say, there are these third parties that your employer or a former employer could pay into, and you get a shekel salary, and you have nothing to worry about. Is if you have a lot of expenses, particularly travel expenses that you want to reimburse for, that's may not be the best platform for you, okay, because they're very sensitive. They don't mind paying you a salary, but they don't really want to, because it's their expenses. You're giving them, you're spending money out of pocket. Let's say the electricity in your office, let's say part of you're renting something that may not work for everyone, okay. If you got a really no expense reimbursement business, I think we're big advocates for those, that platform.
Right. So you're saying instead of opening up your own Israeli company, there are some platforms that you can
Correct.
use that will
Correct.
invoice your employer and pay
Right.
you. Yeah, that's for sure. I mean, the reason why both that and the opening up your own Israeli company works is going back to those five taxes. It works nicely because you won't be subject to the US self employment tax, right? You are getting paid now from an Israeli employer. And while there is no totalization agreement in place, Social Security exempts you from owing Social Security tax on foreign earned income on Israeli employer income. So if you're getting paid from an Israeli employer, you're a salaried employee here in Israel, you are not subject to US Social Security tax. It also gets you out of state tax, right? New York is not going to come back necessarily and say, oh, well, we think it's subject to New York
For
taxes
sure.
unless you are physically sitting in New York, or let's say you are visiting Israel, but New York's your domicile. So it gets you out of that state tax. And lastly, they won't be withholding federal taxes in the US for you because it's an Israeli salary. So you'll be paying Israeli income tax, Israeli Bituach Leumi, and then you file a US tax return. And there's a couple different ways to not pay any US taxes on it. You have to report the income, but you won't necessarily be subject to tax on it. So having your own Israeli company definitely helps. But there's some caveats, like you mentioned, Philip. The biggest one maybe being the fact that it's expensive, right? It's automatic audits. You have to do a whole bunch of bookkeeping for it, and it can get expensive. Some of the other changes that came up that are important is the fact that if you are within that 10-year holiday, right, and now you travel to the US for a couple months, you might be able to claim, if you're working on a W 2 or a 1099, it's much easier to say, hey, Mas Akhnasa, I'm not subject to tax for these 2 months out of the year because I did the work in the US, I did the work in Europe, wherever it is. It's outside of Israel, 10-year holiday kicks in. Now, all of a sudden, when everything is flowing to your Israeli company, it's a much harder claim to tell Mas Akhnasa and say, yes, you see this money, you see that it's being reported, but I'm actually claiming that it's not taxable. They might come and challenge it. If you're a surgeon and the like you mentioned, Philip, you're doing that work in the US, it's harder to make that claim. So that's another reason why it doesn't work. Okay. The third reason I would say is that it makes it much, much more complicated from 2017 onwards. And this was because what President Trump put into place with his first legislation was something called the guilty tax. And the guilty tax means that if I'm making money in my Israeli company and I am not paying Israeli corporate taxes, then it will be subject to me on the individual side. And so as an individual, I am now subject on my corporate income, which, okay, Israeli corporate taxes are high at 23%. So it isn't really the biggest problem that you can find. But very, very often, let's say you aren't making profits, you're taking out too much salary in the first years, it could be expensive. And so you are paying, you have losses in the first couple of years. Now, all of a sudden, year three comes along, you have big gains or income. Now, those losses offset that income for Israeli tax purposes. Excellent. You are not paying corporate tax on that income. But all of a sudden, the US comes in and says, we don't care about the prior years. We only care about the current year. In the current year, you have income. You're not paying tax on it. Guilty will apply. Okay, so that can be a problem and definitely needs planning around it. Where does the one big beautiful bill come in? The one big beautiful bill did a couple of things. Number one, they decided we don't like the term guilty. It makes it look really, really bad. So they actually got rid of that terminology. They changed the name. But the other big thing that they did was that they changed how some of it works in terms of what is the highest tax you could pay, what are the benefits, what are the credits and the like that you can do. And so all of that can work better. One thing I would say, which is important, is that when you land here in Israel, and Philip, I think you would agree with me, when you land here in Israel, let's say you are making Aliyah July 8th, 2025, or you're making Aliyah in August 2025, right? There's a lot of people coming on Aliyah over the summer, getting their kids situated into schools before September. And the question is always, okay, do I need to set up that Israeli company right now? Do I need to do something this minute? And usually I would say absolutely not. There's a lot that goes on when you make Aliyah. What you should do is instead of going crazy and getting set up with taxes and this and that, there is something that you can do called an adjustment year or shnat histaglut. Okay. Now, any other year, but 2025, I would say absolutely come to Israel, make Aliyah, work on that W2, get paid as a salaried employee. Don't change anything around. Stay like that and file that form shnat histaglut. You can do it online. We can help you. Lots of people can help you. And you file it online within 60 days of coming on Aliyah. This in particular, 2025, I would say don't file that form. It still is better. You're not you don't have to start going crazy with all the tax planning and everything right now. I would still say wait. But 2025, it is unique specifically because of what we mentioned in the beginning of the podcast, right? So, Philip, you had mentioned for 2026 onwards, you will have to start reporting your income, even if it's exempt from taxes for the 10 years. By filing Shnat Histaglut, this adjustment year, the ITA will say, great, that means that your tax residency purpose starts after 2026. And because it starts after January 1st, 2026, because you've pushed it off for a year, all of a sudden now you have to report it. So anyone coming on Aliyah 2025, 2025 before January 1st, 2026, now in the summer, I would say relax, don't go crazy about taxes. We will get you covered by the end of the year, the latest. If you want to reach out and deal with that, we can get you set up, get your kids in school and everything first. We'll help you figure everything out, but don't file that Shnat Histaglut, that adjustment year, specifically this year. Okay. And yeah, I think that is, we will wrap up. The one thing I will say is that these aren't your only options. Okay. There are other options out there. You can open up LLCs, S Corps, there's all of these different maneuvers that you can do in order to find it. We want to help you find the best way to avoid those 5 different taxes and get your taxes overall to the least amount possible. So I would say if you are making Aliyah, we always leave you with one action plan. This year, that one action plan is don't file Shnati Staglut. Action plan number 2, make Aliyah, get situated, get your kids into schools, get everything, get comfortable. There will be a lot of changes and adjustments that happen when you make Aliyah. Not a big deal, not a big problem. But when you do, after you've been here for a month or so, reach out to us. We will get you situated. We will get you the help that you need in terms of setting up whatever the situation that you need is and what works best for you. We work with top-notch Israeli accountants throughout the country so that this way we can get everything set up and situated properly, and then we can get the best positions for you, and you can file and be safe.
Okay, so before we end this session, Yaakov, which I think is so important, and so I think one thing that I really would like people to take away is if you're considering one of these arrangements, staying as an employee, moving to a 1099 contractor, this is where we really have value to add. And I think those plans that you make, whether you're going to be making Aliyah before January 1st, 2026, or particularly after, there's a lot of important strategies and also some pitfalls that one could fall into, particularly with these new rules. But one thing that I wanted to add, and this is sort of a little for a subcategory, people in their late 20s, early 30s who are, you know, been working they've been in the employment market making nice salaries for a few years, but they don't yet have 40 quarters, which is meaning they're not yet eligible for Social Security, which 40 quarters roughly translates into 10 work years. Even if you're going to choose one of these strategies to go work for an Israeli company or set up your own entity, there are ways to make that up. And if you're in that 28 to 34 and you don't have those, you got a lot of time to do it because you can't collect Social Security much before age 65 or 67. But it's an important thing to keep in mind. Don't think just because you're leaving the US that you've left that behind. There are ways to get to that 40 quarters, and we worked with many people with many strategies. So I wanted to throw that in. So you Americans, and even if people are listening to this that have been working on a visa, just because if you got those 40 quarters, you'll get Social Security someday. So those people, it may be a little harder if they're short the 40 quarters, but there's also ways maybe we can help you with that
Yeah.
as well. So I think that's for today, Yaakov, and see you next week. Bye bye.
Thanks so much.